Hey guys, Mike here. So obviously this morning, we got some information that scared the markets. Shocker. You ever notice every time we get to the top of the channel there, we all of a sudden get this news and we go, oh my God, I can't believe this happened, right? And so I'm going to show that to you. And, then we're going to go into the charts and I'm going to really dig in and show you the last two times we've been in the moment we're in now. We're approaching the 200 SMA and that right up there at the top of the channel. What happened? And you'll notice it looks pretty similar to what we're going through right now, right? And I'm going to show that to you. And then we're going to go into, because I told you I keep you updated, about the debt we are racking up in detail. And I'll let you make up your own opinion. I obviously have mine, but I'm not going to force that on you. You get to make your own opinion up. Some of you will be, just tell you ahead of time, will be comforted. Some of you will look at it and say, oh my God, that's horrible, right? And then, of course, what do we got to look forward to tomorrow? But, the two things that came out this morning which struck me the most, and I was telling members about, was, man, the UK, woo, 11.1% CPI. Wow, has not even peaked. I mean, look at it, and the target's 2. I mean, that is horrible, right? And then October retail sales comes in stronger than expected. No shocker there. We're still buying the inflated price stuff. And the only reason they're hitting these numbers is because of inflation, right? You X the autos out, still way up, and you can see right here. So, of course, the Fed is not going to like this at all. And the markets were basically kind of like, oh, my goodness. Well, that's not good. And the reason why is because when the Fed sees that, they're like, yeah, well, people are still spending. That's what's happening, right? We're still out there buying all this inflated stuff, right? The groceries and everything. And that's why Target, by the way, got crushed this morning because somebody in the comments says they pointed out, rightfully so, thank you for that, that Target doesn't have a big grocery business like Walmart. And Walmart pointed out in their call that, yes, it was the groceries that, took them over the finish line, right? Because they're upping those prices and we got to buy them. You got to have milk. You got to have eggs. You got to have it. Right, the stuff Target's selling, we ain't got to have as much, right? And so that's why they're going to start doing a lot of stuff. I told the members this morning, cost cutting, all kinds of stuff for them. So who knows where that stock's going to go? And before we get into the charts, I want to show you what a rug pull really looks like. I'm not in the stock. I don't follow the stock, but the chart blew me away. This is Zim, which a lot of people are into. They report earnings, bam, pop 11%. Oh my goodness, it's going to be a great day. And then look at that rug pull, right out of the gates, it got pulled on them. I mean, that is crazy, right? I mean, that is, I don't know what happened. Maybe you know, but that is just like, I know people got sucked into that move and were like, oh boy, and just sold like crazy, right? But looking into where we're at now, this is the third time we've been up at the top of this channel, right? And I want you to look at this for me. So here we are coming up to the golden pocket, right? We get rejected off the 618 and all that fun stuff. So that's what's happening right now, as you can see. And when you go back, let's look here in August when we were up there. What happened? Same thing. We got rejected, right? Right off there. This is the 30-minute. So we got rejected based on the same exact area, and then we moved up to the edge, okay? Then if we go back, here's the other time. In March, right? We're moving up, marching on up. What happens? We get rejected not once, but twice off the same area we just got rejected off of now, and then shot up. I don't know what the news was or anything that shot us up both times. You can see we moved up pretty fast both of those times. And this, of course, is why, being where we're at, people are so cautious. This came out today, right? Latest Bank of America information we got from their fund managers. And the majority of people are in cash and equities on the bottom. And please don't forget to hit that like and subscribe button and share this video, guys. It really helps the channel out. Thank you very much. And why? Because like I showed you yesterday, and I showed people in the Patreon members, we're sitting here at just a lot of stocks have gone up so fast. And I mean, like with no consolidation at all, just rocketed up in overbought territory, setting at major resistance levels, right? And so a lot of people are just sitting there going, I'll wait because, if we break through all these major resistance levels and keep moving, great. Then you can hop on the train, ride it up. But again, long-term trend is bearish, short-term trend is bullish. And why not just wait to see, because it's right there, we're right there at it. See if the short-term trend turns back bearish again, because it's a long way down if it does, right? Versus all this uncertainty outside the channel, okay? And so that's what a lot of people are doing. And no ifs, ands, or buts about that. And who knows? Hey, guess what? Maybe NVIDIA is the one, I'm sorry, I always say it wrong. NVIDIA is the one that drives us over, right? They report earnings today. It'll be a big mover. You can guarantee that one direction or the other. But if it keeps moving up, even though it's up huge over the last like 30 days, then maybe that's what drives us over. Because if it reports good earnings, the whole semiconductor sector is going to keep roaring, right? Because AMD's been on a big roll. I think ON reported I hit a new 52-week high yesterday, I believe. And so, that because it's been hammered, that's why. But that leads us into the debt, right? And I'm talking about our personal debt, what we're doing here, right? And this is the one you want to watch, okay? Because this can tell you some stuff. It's a lagging indicator, but still, it can tell you something. And I give this to you every month. So here's total debt balances in composition, right? And you can see $16.51 trillion is what the American people owe right now. That's up from 16.15. But why is that mostly? Whoa, look at that. The mortgages. Yeah, buddy. I mean, people are paying a lot more for those mortgages. Anything else is really hard to even make out if it went up at all. You see here it's revolving, auto loans, credit cards, student loans. We're going to look a little more in detail on these. But yes, we owe a lot of money. And if you look, here's what worries me probably, right? It gives me pause. The credit cards. Everything else is either flat or going down. And look at credit cards. I think it's going up. It sure is. Right, because we are spending. That's just the way it is. A lot of people, there's no way you could take cash in the stores and be able to buy stuff. So credit card, people are living off of them right now. Here's a great thing. This is why it's not 08. I don't know how they do credit scores now, but if you look at 08, a whole lot of people with some bad credit scores are getting mortgages. If you had a Pulse, you got them. Look at now. This is 760 or plus. Is the vast majority of mortgages. Again, I don't know how they do it. If they're fudging numbers, I don't know. And with all the equity people have built in, we're okay. This ain't no 08 for the real estate industry. I'm sorry. Now, total balance by delinquency. This is an important one, okay? And you'll see a little more detail on this when we break it out. What you're looking for is a decline, and we're going to pay attention to the 120 plus days and the 90 days, really. But if you look down, we were declining, right? Well, now all of a sudden, we've been flattening out, okay? We're flattening out. Why is that important? Because if you look back at 06, 07, we were flattening out then as well, and I'll point that out in a minute. But if you look, it's the 30 days that are increasing. Every single quarter, the 30-day delinquency number has increased. Everything else is fine, right? It's just the 30 days. And so that's the thing to look at again. But we're flattening out, so what does that mean? Most likely, we're going to start curving up, right? That is not a good thing. That's what usually happens before you even see the recession coming. And you can see over there in 06, we started to flatten out going into 07. And then heading into 08, it was picking up quite a bit, right? So that's what you really want to look at. That's just a normal movement, right? And then if we go over here, this is transition to delinquency 30 plus by loan type. Here we go, folks. What's happening here? Look at student loans, right? Why? Because we ain't had to pay them. And so what's going to happen? Everything else is curving up. What's going to happen in January when all of a sudden 300 plus on average is what a student loan is, so $300 a month. What's going to happen when that kicks in to households, right? And especially as somebody pointed out in Patreon, supposedly the latest reports like 66% of people are living paycheck to paycheck now, and I'm sure at least 1/3 of those people have student loans. I would think, if not more, right? And so what happens? That's what I want to know. Is that going to be the tipping point where people say all of a sudden, oh my God, all those $300 or average $300, of course, some people will pay more, some people pay less. But what's going to happen when that kicks in, right? They got to pay that. And trust me, student loans aren't like the rest of these. You can bankruptcy and get rid of credit cards. Student loans, if you don't know, most of them you cannot discharge in bankruptcy. Okay, I don't know the full details. I'm not a lawyer or anything like that. But I know, I used to tell people the saying is the only thing certain in life is death and taxes. I said you need to add some student loans to that, because even if you go bankrupt, a lot of them you cannot discharge. And so check into that one in case you get in some trouble. But the credit cards, you can get rid of that, right? You can get rid of the car loans, the house. Student loans, though, you better pay them, or they're going to come after your paycheck. That's just the way it works, all right? And so that's going to be interesting to see. I'm definitely curious to see what's going to happen. Okay, and trust me, I'm going to be one of those people paying student loans for my MBA. And so, but I also know it's going to be more than $300 a month. But the good thing is we're ready for it. We prepared for it. We'll pay it. But a lot of people, it's going to be a hit, man. A big hit, especially if groceries and everything are still at those levels, which, it's only like 45 days away. So, yeah, I think everything's still going to be pretty costly, right? And so, looking at what we got going on tomorrow, and in fact, like I said, in the video reports tonight, so we'll have to see how that goes. But you got, again, Baba, Macy's, Kohl's, BJ's, Dole. That's going to be a big one. Pay attention to applied materials. That's going to be a big one. Gap, just to see how people are doing on that. And then you're looking at Ross's. And every time I think of Ross, I always think of this comedian right here.
Went to Ross for less. Anybody been to this nightmare? I walked into Ross. I thought I walked into downtown Beirut. I thought a bomb went off at this store. Everything's on the floor.
So anyway, that always gives me a good laugh. And I'm sure you'll see this or know about this by the time this video comes out. But NVIDIA did just report earnings, and obviously reported earnings per share of 58 cents. Missed the estimates of 69 cents, so missed that by 16%. Same time last year, it was $1.17. And I think they did hit sales, and I think their guidance was like, you know, they're not even going to hit full year guidance. But it's funny because it's up like 2%. It's almost flat, right? This is a big swinger when it comes to earnings, right? What does that tell you? That's market makers going, we ain't paying. We're going to kill these premiums. That's what we're going to do and try to open flat in the morning. So whoever has calls and puts, ain't happening, right? And so we'll see. Maybe on the call they'll say something and it'll swing one way or the other. But that does not surprise me at all. And so anyway, hope you got something out of it, guys. Hit the like and subscribe button. Let me know what you think is gonna. But tomorrow and Friday is gonna be looking. So you think we're actually gonna go up, reject, or you think we're actually gonna continue and finally break through and go into this new bull market as people keep calling for? All right, have a good one.